Best ever listeners, welcome back to the best ever CRE show. This is Beyond Multifamily, joining you every Wednesday for discussion about items that are not apartment investing. Listen in every Wednesday. Don't forget to follow and subscribe so you don't miss one. I'm Amanda Cruz, as always, joined with Ash Patel. What's up, Ash?
Hey, Amanda, what a cool show today. We spoke with a gentleman from Western New York who's got a unique private-public government partnership deal. And I feel like I was pretty hard on this guy because when I hear private-public government, God, that screams corruption. Turns out it's a great organization. What do you think?
I think we decided you're his only critic. So congratulations on that. Yeah, we tried to follow the money. So the whole time, you and I were just trying to get back to how can people come in and make money? So it was an interesting conversation, and Tom did a really good job. So great conversation, and hope everybody enjoys it today. Ash, how about bringing on new guests? We love to chat with people who are doing beyond multifamily. If you're an investor who's not an apartment investor, or you're exploring other things and doing that, go to
bestevercre.com.
Podcast sign up. Go there. We want to talk with you.
Yeah, and we have a lot of fun. So please, if you listen to our show and if you've done any commercial deals, we want to talk to you. And maybe we'll be able to help you. Maybe you'll be able to teach us something, teach the audience something. We want you on this show.
Come on. And also make sure you're going to the Best Ever Conference in February in Salt Lake City. I'm sure you already got your ticket, but if you have not, use Podcast 10, all uppercases. Ash and I always have a blast there. We look forward to chatting with you.
All right, let's welcome Tom Kucharski from Invest Buffalo Niagara.
Tom Kucharski, welcome to the Best Ever CRE show. How are you doing today?
I'm doing great. How are you? Thanks for having me.
Hey, we're good. Excited to chat with you today. And we have a little bit of a different story here with you. A lot of times we chat with people who are specific real estate investors and active in that space. And you're sort of tangent to that.
Right.
Can you give a little bit of an intro and what you do?
Sure. So our group is called Invest Buffalo Niagara. We were formed in late 1999 as an effort that was an offshoot of the public and private sector getting together in the Western New York region, putting together enough resources to do an extensive analysis of the trajectory of our community, basically. A community that in 40 years went from top 10 in the country to one that had legacy industries leaving along with a lot of folks. And we were trying to figure out how to go forward. So one of the primary results of that study was we had all of the natural assets to bring back our economy. It was going to be very different than steel and milling and automotive, but that we had to change the way we were fundamentally doing economic development and reacting to expressions of interest and dealing with our existing companies and most of all, promote the good stuff that's here, and to start to change the image of snowstorms, chicken wings, and falling down buildings. So, not that hard. So 26 years later, we've managed to move the needle on all of those issues and are kind of faced with a new dilemma that we kind of, over the years, have been planning for stagnancy or decline, not unlike a lot of Northeast and Midwest communities that have had slow growth and change of the complexion of their industry. We have, over that 20-year period, started to really see significant growth. And now we're trying to keep up from a commercial real estate perspective, developing sites and taking available buildings and making sure that they at least get consideration for the new industries that are now part of not only Western New York, but Rochester, Syracuse, and Albany in this part of the world where the semiconductor industry is coming with Micron. And we have had several announcements in green energy, sensor technology, the kinds of things you wouldn't necessarily associate with this part of North America, but is coming and is coming fast. And so we're really having to pivot and be much more aggressive in how we provide sites and buildings to the industries that we're targeting.
Thomas, what kind of tools do you have in your arsenal that you can deploy to attract these big Fortune 500 companies, big developers?
So shortly after we decided to do this in 2000, we had to get back to basic blocking and tackling. And that is having a good information set that if you're doing investigation of our region, that would be shared across the region, then eventually with the super region of Rochester and Syracuse, and then eventually with the whole state as to what, instead of having 5 different data sets from, 5 different counties, you had a consistent, reliable, sourced. In many cases, we were doing our primary research on critical areas such as workforce and the actual we were one of the few areas that didn't have a commercial listing service for industrial and office and flex buildings in the United States. We have since built one. So you have information, and then we're your connector to all of the incentives, to all the development community, to all of the public sector folks that that are involved in permitting and involved in grants and other things. We act as kind of an agent for the region. And every major metro area in the country has a group like ours. We were one of the last ones to be formed.
When I say arsenal, do you have the ability to get tax abatements, different types of credits, grants for people to come in?
All the above. So we are kind of your conduit and your assistant if you're even getting down to writing grants for companies or helping them connect and go through and hopefully shortening regulation and expanding the business proposition to a company coming here. So we act as the companies, and I would suggest anybody listening, if they're in their communities and they're considering any type of expansion or change in real estate, that they get in touch with their economic development agencies, and you'll be surprised at their connections and their abilities to reduce the cost of operation and minimize the risk for that opportunity.
You are essentially a non-government entity, is that correct?
Correct. So we're a private not-for-profit. We're a C6 and a C3. So for normal business operation, we work with, and just about every deal that we have, big and small, we work in a confidential manner. So if you're working with us, you don't have to worry about being foiled by a government agency and the like, which is often very important in the pursuit of confidentially a new location. We also have at the table all the CEOs of the major companies and even some of the startups in this western part of the state that are on board with the public sector folks, and they all contribute to our organization. Very similar model to a lot of other places in the country, but you have everybody at the table with their influence and their capabilities and their connections to help facilitate getting a deal of jobs and investment to the region.
Let's take a quick break for a word from our sponsors. And then, Tom, when we get back, I want you to dive into the money and how the money flows here. All right, Tom, can you explain your role, how you get paid, and how your organization benefits?
Right. So the beauty of our organization is that we get investments from both the private and public sector. So we have a board of 70 entities here who contribute to our organization, and the ROI for them is not getting deals or commissions or whatever. The ROI is to improve the health of the community financially. And so we don't take commissions. We work with all the entities, and at last count in our client management system, there's about 120 of them across the 8-county region that we work with to basically promote our best business opportunity to an expression of interest that we've qualified, and working as an 8-county region. And in some cases, we actually work with Rochester and Syracuse as the growth is occurring across this whole part of the country, that we try and capture that opportunity. And then once we start to work with the state, the local industrial development agencies, the cities, the towns, the workforce entities, all of those entities have programs that can assist business. And they're based on what the economic opportunity is. How many jobs are you creating? What's the investment? Are you in a targeted region that needs help? And are you in an industry that we're trying to build the cluster for the future?
Are you basically taking a fee for
No,
your
we don't.
organization?
No, we get investments. So companies basically write a check to us and they say, go create jobs, create investment. There's no partisanship. There's no favoritism of any specific investor. It's marshaling all the resources in this part of the state to present the best business proposition to an expression of interest. And that's really important because, when you're working with economic development agencies, in some cases, they are funded by public entities or they may be a partisan effort, and you'll only get a part of whatever that agency wants to show you. We show you everything. And our success has been based on having a large net of opportunities to be able to present to business interest.
Let's jump into an example. I'd love to hear something that started with you guys and has actually come into development.
Sure. I had, in thinking about today, I have a couple that'll show you kind of the diversity of real quickly, that'll show you the diversity of the interest that's going on here. So we are fast emerging as a real tech center. We've been on a lot of Forbes and a number of ratings, moving up the rankings as far as tech. And it's really not a surprise. We have a supercomputer on campus at UB here. We have a heritage of technology. We have centers of excellence out of the University of Buffalo, which is 40,000 students here in Western New York, and it's just been underappreciated. So one of the deals was a company out of San Francisco, Odoo, which is now a $3 billion company, and they're a software development kind of a client manager system for companies to use, especially if they're in industry. So they started with an expansion, a small expansion here in Western New York in our tower downtown. They came in through our website, and after investigating kind of where would be a good new place to go, that they weren't facing the labor pressure and wage pressure of other tech centers. They now have moved to Fountain Plaza a couple of years later, which is another large business tower in the Central Business District. And they've committed to 350 software engineers in the next 5 years. The state, as part of the Buffalo Billion, which listeners can go and Google, it's basically the state gave us $1 billion to kind of jumpstart what we were doing 5 years after we were formed. So they gave them that space, 6 floors of that tower for $1. And so they have to create 70 jobs a year. Their eventual plan is in 10 years to create 1,000 jobs in Western New York. Now, on the other end of the spectrum, Milkbone has been a long-standing 90-year-old company in Western New York on the east side of Buffalo, which has transitioned and is one of the more underserved parts of our region. And they were thinking of perhaps pulling out of that facility, and we worked with the state and the local workforce training providers and our IDA in providing low-cost financing, and they're making a $50 million investment that will keep all of those jobs there and will outfit the plant with current technology and hope to, with enough space, they hope to expand by another 100 jobs or so in a part of the city that really needs it.
Tom, you're talking about some interesting concepts here of bringing business in and reusing buildings that essentially are worthless. A lot of real estate investors are listening, including myself. I know areas in North Carolina where I am that have sort of been left behind. Mm-hmm. How can real estate investors come in and work with you guys and get involved and add value?
So we had kind of, when we got started in the early 2000s, we had this as a core part of our strategy: bring everybody together, the bankers, the venture capitalists, some of the businesses, the developers, real estate folks, and examine what the problem is. And rather than just talking to ourselves and doing it ourselves, we hired a professional consultant to do an analysis of the region, especially in industrial flex and logistics space. That's still a major backbone of our economy. It's serving us well now with all the backshoring going on. But they eventually came up with 52 sites across Western New York. And happy to report 3 years later, we've gone through 48 of them. They're already been sold and moved. And that really speaks to the power of everybody working together, convincing the governor to put in $200 million a year for the last 3 years to help soft costs with development, any infrastructure challenges when you're reusing old facilities. Sometimes they're on well and septic. Sometimes, now the ability to hook up electric is now several miles away, as it used to be right around the corner. How do you get workers there? What's the rapid transit? And everything in between. And so we really have a collection of over 200 folks that meet in committee once a quarter that are reviewing this. And as those numbers indicate, we're going to have to do another tranche of this if we want to, especially in the future with Micron coming here and already having clean rooms on campus at the University of Buffalo, RIT, U of R, University of Toronto, which is just up the road. We're already a place that they know what's here and are recruiting folks out of here. Now we're actually going to have a semiconductor fab, and there's an expression in corporate real estate is no site, no project. And so we know that we may have all these other things that companies would be very interested, but physically we don't have a place for them to be and be able to connect all the assets that they need, power, water, and the like. We're gonna suffer from deals going elsewhere where they could be here.
If I'm a real estate investor in your area, Tom, how do I get in on this? So
basically, we need, because we don't take any fees or commissions, the concept is to donate or invest, I should say, at certain levels. So the major corporations, they invest some as much as $250,000, $300,000 a year. The board level is at $50,000, and we have many of the new companies that we brought here are smaller, are investing at 10, 20, 25,000. And we put it together, and we have 4 pages of metrics on everything that we do, and we have a committee of the board that reviews all those metrics, and these companies really are investing based on the ROI that we return to the community. So anybody can join, and it's primarily, as you can imagine, it's those folks that depend on the growth of our community, and that. It's everything from grocery stores to development folks to banks and the like.
And where do you see the real estate investors getting in? Are they partnering with businesses who may want a space but don't want to own it?
Yeah, I mean, we're a unique market here, and anybody else that you would talk to in my capacity in other parts of the country, in that we're, from my office, I can see Canada right over across the Buffalo River. So a major part after the pandemic, the Canadian market is coming back. And a lot of those are privately held smaller interests. So they want to buy something, but some of them just want to lease something and put their toe in the water. And for them, obviously, we're all friends here, but it's a different country that has different business mores and the like. So some are only interested in buying. Some want to lease and want to do it small. And we have examples of companies that came in with a few folks in a small office, and they're now operating at 300 people and manufacturing things. Many of them do not move their facility from Canada, but they basically use this as a springboard and a platform to access the U.S. market.
How have tariffs affected that?
I knew you were going to ask that question. So initially, as you can imagine, it was not pleasant, and some of the rhetoric our dear friends in Canada did not take well to. But what has cut through, I think, and what served us well is 20 years of relationship and trust building between the folks in Southern Ontario, the Toronto area, even as far up as Montreal and Quebec City for life sciences and a number of things. So we were able to have the conversation to get past the 51st state and some of the other back and forth. They're on, they're off, they're on, they're off. And actually an unintended positive consequences that many of our Canadians, despite being and understandably offended, they realize that in an effort to deal with the tariff situation, having a U.S. facility that they can go and visit and be back home for a Blue Jays game at night makes a lot of sense.
Speaking of which, you guys were in Game 7 of the World Series.
Yeah.
You guys almost had a World Series up in Toronto.
Yeah, we have the AAA team for the Jays, and during the pandemic, they played a whole season here in Buffalo. So more than half the roster that was playing in the World Series had some time here in Buffalo playing. So we got to see them over the summer.
Tom, on a side note, has that border crossing become a lot more difficult? I was there over the summer, Buffalo to Canada and back, and seemed like it was a little bit more stringent than it had been in the past.
Yeah, it is, and I think we got to remember that there's different approaches to our boundaries and our borders, and the Canadians see this as a tremendous opportunity here, and that they're we're very collegial. We have 25% of the season ticket holders for the Bills are from Canada, and we're down here going up there for theater and world-class dining, and there's a lot of commerce. We have to deal with, on our side, some of the crossings, while on the Canadian side are of national management. On this side, it's the state of New York, and then it's also the federal government. So it gets sticky as far as what you need to do, and at times the border unions on both sides can. We've had wildcat strikes. We've had all sorts calling in sick, that kind of thing, and we just kind of plow through it and make sure that we're talking to each other and working through issues, and that seems to be the best way to deal with a lot of this.
Let's go back to following the money. Now, Invest Buffalo Niagara, you guys will actually own real estate. Is that right?
Nope.
You don't.
No, we're just so when it comes to any type of government or quasi-government agency, which does come into play when you're reclaiming brownfields, problem real estate properties, we help orchestrate and work with a buyer, a developer, a business to work with the governments and the quasi-government agencies to make that happen. We are the reason we can be as agile as we are is that we're not encumbered by operating a railroad, owning an industrial park, that kind of thing. We're the agent that promotes the region and brings those opportunities here, and then acts as kind of a client manager with all the entities that a company would have to deal with to find a site, to develop a site, to go through environmental review, all of those things.
Those buildings that you can get for $1, can you give us the background on how that came about?
Sure. So there was an initiative that the New York state government committed $1 billion, as I mentioned, to regional initiatives in our region to get us going again. And we already done a lot of the research and planning for what we wanted, what industries we wanted to approach, what subsectors we wanted to approach, and as I mentioned, getting some of the sites ready. So part of that initiative, well, there were several buckets quickly. One was the downtown waterfront, where we're building a replica of the commercial slip for the Erie Canal, which comes right into downtown. And we actually, through that investigation, actually found the end terminus of the commercial slip. So we restored all of that. It's now a tourist attraction, and there's a lot of new residential space that's going in. The Buffalo Sabres, the hockey team, their owners built a hotel and 2 pads downtown that have the NHL's training and testing every year there, and revitalized all of the central business district, really. And then there was an effort to kind of help both the commercial real estate, office real estate, and help a lot of the emerging technology that was coming out of UB and capture that like a lot of other places do. And so that's where we restored this real estate in downtown. And if you're a qualified business, it was originally IBM with their Watson project. They took a different course, and so we had it available to offer to Odoo. Another one was the remediation and eventual luring of Tesla to build their solar panel plant. You're the only one in the United States that was basically given to them for $1 for 10 years.
So you're renovating somebody else's property, or is this owned by your organization?
So it's not owned by us. It is owned
Okay.
by the Industrial Development Agency, which is a quasi-government entity of the county. In the case of the Tesla facility, that was big enough that it's owned by the state. Well, it's owned by the state's development arm. And so they're the ones that you work with as kind of like a master developer and making sure the state gets what it wants out of it. But it's a very attractive. It's hard to work, obviously, with steel companies who aren't here, who own those. We're right now redeveloping Bethlehem Steel's property, which is 1,600 acres on the waterfront here. And we've had our first 4 businesses locate there. We don't own it, but the county owns it.
I want
Let's
to try
take
to
one more quick break, and then let's get back, Tom, into...
and we're going to follow the money when we come back.
Yeah, we want to
Right.
follow this money train.
Okay, so there's a piece of real estate that's being vastly improved by your organization in terms of renovations, and then being greatly improved in value by getting a Fortune 100, Fortune 50 company in there. Now, somebody's got to benefit. Does the state or the government entity continue to own the building and play landlord, or is it sold off?
So it is. They still own it, and the impetus and the commitment of funds. You're trying to follow the money here. So why would we improve an old brownfield of Republic Steel and basically present a developable shovel-ready site for Tesla? Is the return of 1,500 technology jobs and the investment by Tesla of $600 million in the site. So that is the return. And, you can argue about, what that is, but, in a place like us, if you were to interview anybody in the Northeast or the Midwest, we've kind of gone through all the low-hanging fruit. And now in an effort to kind of have sites available for the new economy, the public sector has to make an investment that's basically based on, there will be a return of private sector investment and job creation.
Bringing back that brownfield, how much did that investment cost?
Oh my goodness. I don't have an exact number. You could probably Google it, but it's in the hundreds of millions, because as the point I was trying to make is that wherever you look, you have brownfields that were used for, everything back to World War II and the Manhattan Project and arming the country during the Korean War and all sorts of old uses that are not, they're not here anymore, but they're valuable resources. They're strategically positioned near infrastructure and near labor and the like. And if somebody doesn't take ownership of it and bear the brunt and the risk of all the geotechnical and all of those risks that come with development, then they'll continue to sit fallow.
Totally understand the getting land shovel ready for a large company. And, when somebody like Tesla is looking at where to build a massive facility, they'll have requests for proposals.
Correct.
And you're going to compete with other municipalities.
Absolutely.
So totally understand, money well spent. But I still am trying to wrap my head around, the state owns a building, your organization improves it.
No, we
then
don't.
leases-
No.
Okay, help me out.
Yeah, we're the glue here. So we're
Okay.
the connection. We have the connection with Tesla. They contacted us. We contacted the governor's office. We had initial conversations. We got to develop Tesla from an expression. Hey, do you have a site this big? Here's what we're looking to do. Send me your workforce analysis. Send me is there going to be, in this specific example, is the state of New York going to embrace this from a residential solar panel perspective? Is there a market for it? Is the state, which we are, trying to be a leader in climate action and new energy pursuits? And would you provide a market? So it's more than just a real estate proposition. It's all the other things that would make this successful for Tesla. So all we have done is promote the region, going to places, being in publications, meeting with folks, having done 20 years of professional experience with folks that Tesla deals with, to say, hey, you ought to investigate Western New York because they will take you through the process and have a successful outcome. That's where our role is. And then, it's up to each municipality to figure out. We have one of the largest Amazon facilities in the country being built right now, north of the Niagara Falls Airport. It was Niagara County and the town of Niagara deciding to offer the land and create the infrastructure to attract this interest that was looking at all of Western New York when we started dealing with it.
Yeah, Tom, I grew up in New Jersey, and no stranger to corruption and greasing palms. And I can't help to think, when I hear it costs money to be on the board, to be in the organization, and then you could potentially benefit greatly by getting properties for $1. That screams to me pay to play.
Well, we are pay to play, but not from the perspective of, you join our organization to get deals. The bottom line is you can be a developer and you join our organization. If you don't have sites and buildings that can match up with the business interest, you're not going to be considered. And, then the investor has the choice whether to continue to participate in trying to improve the region or take their ball and go home. And so we have lots of developers here who are continuing to write the check every year for 25 years, and they're getting very little business interest, but they realize that a collective effort is better than not having any resources to be able to promote our region.
That scares me. There's a lot of money at play, a lot of big decisions, a lot of money to be made, and the government's kind of involved in this. Do you get a lot of critics like me?
No, not really. I mean, the antithetically, it's like, how else would you get this done? The costs of remediating some of these sites are so overwhelming that no developer is going to take it on. The deal won't pencil out, and the risk is immense.
Yeah, there have been other private-public partnerships throughout the country, and while they do an effective job, one in Cincinnati in particular, they took the most dangerous neighborhood in the country and transformed it into one of the most sought-after places in the Midwest. It worked for 10 years, and it was a collaborative partnership. A dozen Fortune 500 companies were involved, a fair number of government officials, and they transformed this neighborhood. A lot of pay to play. Buddies of some of the people in charge would get these sweetheart deals. It worked, and now 10 years later, it's regressing to being a very dangerous neighborhood again. So how do you keep up what you're doing? And really, back to, how do you address the critics that say you are pay to play?
Well,
You're the only one, Ash.
We really haven't. We haven't had really any critics because we're in a place where we're not favoring one geography. We're not favoring one entity. We're matching up business opportunities with those in the community that can meet that. It doesn't matter if it's a private developer, if it's a publicly held or quasi-governmentally held site. All the other criteria for that business to be here has to be met, or they're not going to be here. It's a highly competitive business, and we're very transparent. We really don't have to be. We're not under Sarbanes-Oxley or any type of government transparency, but we are. We report on our metrics, on where deals went, who it went to, and how they were funded. I mean, it's public record. You can go look at it. So we really haven't had a critique of this, because we know here or Midwest communities, the investment that needs to happen in Cincinnati, that's an older community. Philly, Richmond, Rochester, Minneapolis, St. Paul, all have organizations like ours that connect to resources that can present a developable opportunity. In business going forward, the time for consideration from the time a company contacts you to the project window and when they need to be on the ground has shrunk dramatically. So if you're out there promoting Western New York to the greater business community and the targets you're going after, and you don't have the ability to provide a site that can match up the project window, you're just wasting a lot of money.
Yeah, and that makes sense, because all the examples that I'm thinking of, it was just a hyper targeted area, one particular waterfront or one neighborhood. You're actually out there promoting an entire region.
Right.
Okay,
And,
so that
and
makes a lot of sense.
you were out there reporting to the county legislatures, to the common councils of the city, to individual towns and villages. So everybody knows what they're getting into, and they've bought into this because they know. But for that type of greater awareness within the targets that could be matched up with our assets and our existing industry here, nobody would have the capability, or as we did, and I mentioned earlier, we would do it separately and not have any type of scale to be able to promote the region.
Yeah, and to your point, Tom, I just did some quick research. There's nobody critiquing you guys. You're doing a great job.
Tom,
Thank you.
I want to know how you get the developers in on this, because you obviously want to solicit developers to come in. And if you're saying, hey, it's going to be a couple $100,000 a year, maybe after 25 years you get nothing out of it except for you feel great. That's not a really great advertisement. So how is it that you're getting all these developers on board?
The developers that we have here, and by the way, we have new developers. Actually, I worked in the Lehigh Valley in Pennsylvania before coming to back home to Buffalo. We have a new developer out in New Jersey, J.G. Petrucci, who's doing a spec building on the Bethlehem Steel site. So even though he has not been an investor in our organization, and some of the investors in our organization have been trying to do spec building, and some have actually done it on the Bethlehem Steel site, they now have welcomed him into the community to do the next site, because as we know, if you demonstrate to the development community you can actually get this done, then it provides a pathway for others to want to come in. Particularly in Toronto, we've had a lot of success with developers in Chicago and Cleveland looking at the market, and it's really an enlightened view. It could easily, and it has in examples across the country, fall into organizations like ours where investors didn't get what they thought was their piece of the pie, and they've tanked the whole effort, only to a couple of years later go, why did we do that? This was actually working pretty well. We ought to reconstitute that. And some of you would be very surprised that some of the regions that we really admire get a little selfish and greedy, and they tank a whole effort that could and was bringing them success. Here, we've really come back from the dead. I mean, and now we're this thriving place that is now having to adjust all of our regional planning and how we present ourselves, because we actually have right now more deals than we have places to put companies.
It's a dang good spot to be in.
Yeah, so it seems like joining the organization gets you a seat at the table. You get to see the inner workings. I'm sure you network with all the right people, and you guys all have the same mindset on trying to improve the region.
Right. That was probably the hardest part the last 25 years. We didn't win a Super Bowl. We didn't win a Stanley Cup. Yeah, okay. Let's get on with it. And, every time we had a big company announce that they were leaving, it was a woe is us. We had Sumitomo Rubber Company, former Dunlop, based in Buffalo, closed right before the holidays last year, 1,500 jobs. Well, we just announced that another Taiwanese company is taking the site, and it's 100 years old, and is going to redo it and make it an industrial park. And they're going to start in a couple of months here. That's a 9-month turnaround on a $28 million deal, and attracting somebody in manufacturing to come to our region with the global pressures that you have right now across every market, especially something like making tires. So
Tom, you got blamed for the loss. Did you get credit for the win?
That's not the way this works. I mean, the way that you bring to answer your greater question, the way this works is you let everybody take credit who has to take credit. And we're in the back serving punch. But that's when we know at a press release or a ribbon cutting that we've done our job. And the investors in our organization, they understand that too. And that's, this isn't any different than any other part of the country. And I've worked in, as I mentioned, I've worked in Virginia and Florida and in Pennsylvania, and with the same model, basically.
Tom, you have a great track record of attracting the best companies. What about an investor who maybe has a 100,000 square foot building, 50,000 square foot building, whether it's industrial or office, are you able to lend them any type of help?
So if you were to look at the last 26 years, our median for our deal size is 11 million and about 40 employees. That's our sweet spot. And that's kind of rebuilding the backbone for the region to be able to, weather the economic storms better than having very large employers that if they're affected, they affect the whole region. That is really working with small business, working with startups, working with entrepreneurs. That's a huge part of what we do, and working with existing industry and connecting them to the Internet of Things, to connecting them to a supplier that they're going halfway around the world, and we have one right down the road in the southern part of the region, that kind of thing. That's what we do most of the time.
Well, Tom, in an era where our government has been shut down for the longest duration in history, thank you for sharing some of the great things that you guys are doing in Western New York.
Oh, I appreciate the opportunity, and thank you for your interest.
If Best Ever listeners want to learn more about Buffalo Niagara, where should they go?
www.buffaloniagara.org. And it'll connect to our talent repatriation effort, Be in Buffalo, where we work with 72 Bills backers bars around the country to bring folks back. It'll have a section for site selectors and look at the stuff that we promote on behalf of the region, and have the data set that I mentioned to you, where we're all working off the same song sheet and more. So thank you.
Thank you, Tom, for joining us today. Appreciate your insights. And Best Ever listeners, thank you for joining in today. If you enjoyed this episode, make sure you share it with somebody who could find it useful. Always follow and subscribe so you can get Invest Beyond Multifamily every Wednesday. And of course, have a best ever day.